Hello, my name is Steve Bigelow with the Candlestick Forum. Today, the markets exhibited the strongest individual candlestick signal, and that is the kicker signal. Very easy to identify. They open here, close here, create a dark candle. The next day, they open at or above the previous day's open and go the opposite direction, pretty much illustrating that the investment sentiment has been kicked in the opposite direction. We can see where the T line has acted as a support level for the Dow, doing a J-hook type pattern up through the 200. And today's positive trading actually broke another downtrending resistance level that had been created by, over the past few months, the recent highs. This has a strong implication that we're in wave 1, wave 2, now going into wave 3. The NASDAQ also created a kicker signal, kind of a double bottom, gap up. Remember this, the more they gap this up, the more strength they're illustrating in investor sentiment. Gapped up through the 50 after gapping up through the T line, and now we're right here at this resistance level. Positive trading would tell us they're confirming the kicker signal and telling us the 50-day moving average is not going to be acting as resistance. So all these indications are a J-hook pattern on the S&P 500 right here at the 50, gap up, next likely target up here, wave 3. The strength of a kicker signal is the strongest individual candlestick signal, where it clearly demonstrates that once you see a kicker signal, this is your expectation, a very strong price move, as we saw in Madeira. We recognized a kicker signal setup last night when PetQ announced earnings, and they actually reversed and closed up here after hours, telling us if they're opening positive right here at the 50 up through the T line, there's a likelihood you're going to see a strong price move. That allows us to get in right away. And if you do recognize or identify a kicker signal and didn't get in it, just a very good place to get in is if this represents a very strong change of investor sentiment and you find it on your scans the next or that night, all we need to see is bullish confirmation the next day, which is going to imply there's more upside. So kicker signals work in different fashions. This is a trend kicker signal. Notice your best friend gap up off the 50, strong price move, consolidation. Then today they opened it at or above the previous day's open and went positive. Another strong implication, there's more upside to this trade. So if we know that when you see something gap up above the previous day's open, that tells you if you're short, they shouldn't be gapping up above the previous day's open. Your first move is to close that short position immediately. But on top of that, if you are short and you see that they've gapped up, you want to close that short position, now you can get ready to go long. Again, using the information built into this signal, telling you there's a strong reversal. Not only a strong reversal, but a gap up through the T line, which is the downtrend. That's additional confirmation if they open this positive. So 2+2 analysis is nothing more than identifying a pattern, starting wave 3, based upon one of your strongest candlestick reversal signals, the kicker signal, right off the 50. What's the trend analysis? Wave 1 and wave 3 are likely to be the same. So we're going to be doing a training session this next Saturday, not this weekend, but on the 19th, the Triple T training. which is where you take all the elements of the T line and use it for identifying with a much greater degree of probability of your price moves, your trends, when to get in or when to get out of a position with a much stronger degree of probability. And if you see a big price move, even if you're a day trader, where do you get into a position where you see it's breaking out? Well, that's where you flip to your 10-minute chart. And as long as you don't see any sell signals and you're above the T line, you can be buying. When do you take profits if you were buying down here? Same trading rules that we use with a T line. The further away you move from the T line, the higher the probability it's going to come back and test it. And when you start seeing sell signals up here, that's where you take your profits on a day trade. This is not rocket science. Investor sentiment works the same way time after time. So join us. It's well worth your while. It'll be a full day training. You get a lot of information that other investors don't have, not access to, but don't realize how relevant the natural support and resistance level of the T line works in your favor. That'll be it. We'll see you in the chat rooms.